after what has been a relatively wild week in the markets, I want to go to Chicago and find out from the source what the traders think about all this market activity. We have Scott Gecas on the line. He's with the Fox Group. Scott, this could be a very interesting commitment of traders report that will come out later on today when it'll show the positioning of the large commodity funds. However, we have to put a big asterisk on that because I believe when that comes out, it'll be as of positions on Tuesday. Am I correct?
Yeah, I believe so.
So that would be before the thing was signed.
Correct.
Okay.
So it's going to be very interesting to see what those numbers are going to be coming out. So if we look at the numbers going into before the phase one signing, we had all the funds pretty much net short across the board. Now with the corn market, I would not be surprised if you see all that short covering happen today. On the bean side, you're still seeing a little bit of downside pressure. Right before that, the signing of the phase one deal, I was talking about those 920 puts. They continue to build. The open interest continues to increase. There's over 2,000 of those that traded just today alone. So the corn is definitely holding up the bean market, which is definitely a good sign. So, but if we see any type of pullback in the corn market, we expect those beans to come off a little bit. If we break that 920 because of that increase in the open interest, we expect a little bit of a spike in volume as well as a spike in open interest.
Now, on the wheat market, we did have a rally in the wheat, and then it sold off, as we mentioned yesterday. Had a big sell-off in the Chicago wheat, and I believe Kansas City led the way down. But I've been noting this morning where that sell-off did not violate that long-term uptrend line, and today, where we're now bouncing back off of that again, it seems to be fairly safe. So do you continue to use that as a support level for this wheat market?
Yeah, there's a lot of different things going on in the wheat market. So the French planting was down about 10%, and that's the longest it's been in about 18 years or so. So that's definitely adding a little bit of support. The Australian wildfires, their production is being dropped a little bit because of that. So we expect that wheat market to continue with that uptrend.
Okay, we're going to take a quick break right here, Scott, and then we'll come back and we'll take a look at the livestock sector. Crazy moves in that market as well this week, and we'll sort it all out when we come back. We are talking with Scott Gecas of the Fox Group in Chicago right now as we look at our livestock trade. Interesting gyrations going on in the grain trade, as we said in that first segment there, and also kind of a mixed market action going on right now in the livestock. It seems kind of indecisive as we head toward the weekend here, Scott. Let's look at live cattle right now. And in the live cattle board, we are narrowly mixed. We have February down 17 at 125.95 now. But then you have the April going 45 higher, and it's at 126.88. Then the June is only 8 higher, and the far out deferreds a touch weaker. Meanwhile, on the feeder cattle side, let's switch over there. We have January down 75. Is at 144.68. March down 57. I would guess that maybe the much higher corn market is probably weighing like an anchor on the feeder cattle trade.
In theory, yes. And that's why you're just seeing a little bit of a back and forth action. It's not really that big of a moves. But just overall, I mean, everything with the cattle market, we're just going to keep an eye on the cash trade. Cash trade is just roughly around 123, 124. See some a little around 125. So if the only thing we're looking at is the cash. If we see a break in the cash, we expect the net long position to start to liquidate. It just hasn't happened yet. That uptrend is still intact. We're expecting a little bit more upside in that. The calls in the cattle, I typically don't talk about the option flow in the cattle market, but it continues to build on the 129 calls and 130 calls. So that leads me to believe that there's a little bit more upside in the cattle market.
That's always an interesting clue when you can kind of follow the trace of the options movement. Sometimes that can be a foreteller, if you will, of what the futures will be doing. Let's look at the lean hog trade then. Lean hogs right now on the big board in Chicago. Let's see if they're going higher or lower. Right now, everything has turned lower. We have been mixed. February lean hogs down 13 now at 66.75. The April contract losing $0.50 and is trading at 73.28. So it's well off its earlier highs of the day. We're much, much closer now to our lows of the day and lower across the board, but not by a whole lot there. Does that concern you as we head into a long holiday weekend like this with lean hogs going down?
Yeah, well, the whole lean hog market is, I mean, it's a soap opera in itself. So we have the exports that are well above average from last year. We have the 2020 commitments that are up over 100% so far. Whether or not we see those cancellations, we don't know yet. We have to wait and see. But of those commitments, China is 55% of those commitments for 2020. So we're just going to keep an eye on that. We still need the consistent export numbers to come in place. But if we start seeing cancellations, we expect that to continue to drop. I can tell you right now, all the traders and some of the farmers that we've been talking to, they're very skeptical on these commitments from China, whether or not they're going to follow through with these or not.
Okay, thank you. I appreciate it. Scott Gecas, he's with the Fox Group there in Chicago. Interesting dynamic.